Hello everyone, welcome to the 72nd episode of me learning how to trade in Forex. So in the last video we went over how to use pivot points to trade breakouts. We learned the aggressive and the safe way of trading pivot points. So aggressive is just basically trading as soon as it's up to like a resistance level and just hoping that it will just shoot straight through. The price will shoot straight through. The safe way is just waiting for it to bounce and then bounce up again, so that you get that confirmation that it's actually doing what it's meant to be doing, aka going up if you're buying or going down if you're selling. The role reversal, so when support levels do break, they usually turn into resistance levels. Picking stop, placing stops and take profit targets. And now we're currently doing how to use pivot points to measure market sentiment. So let's get started. How to use pivot points to trade. Oh no, to measure market sentiment. 12/03/2024. Right. How to use pivot points to measure market sentiment. There's one other way to incorporate pivot points into your Forex trading strategy, and that is to use it to gauge market sentiment. So pivot points can be used to gauge market sentiment. What this means is that you can tell whether traders are more inclined to buy or sell the currency pair. Meaning you can infer whether the traders are more inclined to buy or sell, isn't it? To buy or sell the currency pair. All you would need to do is keep an eye on the pivot point. You should treat it like the 50-yard line of American football fields. Depending on which side of the football, in this case price, is on, you can tell whether buyers or sellers have the upper hand. If the price breaks through the pivot point to the top, it's a sign that traders are bullish on the pair, and you should start buying the pair like it's a Krispy Kreme donuts. Here's an example of what happened when the price stayed above the pivot point. So side the price is on, you can tell whether buyers or sellers have the upper hands. Depending on which side the price is on, you can tell whether the buyers or the sellers have the upper hand, aka whether there's more buyers or more sellers. If the price breaks through the pivot point to the top, so going upwards, it's a sign that traders are bullish on the pair, and you should start buying the pair like it's a Krispy Kreme donuts. Here's an example of what happened when the price stayed above the pivot points. So pivot points here. Notice how price opened above pivot point and stayed that way. Right. In this example, we see that Euro USD gapped up and opened above the pivot points. The price then rose higher and higher, breaking through all resistance levels. Now, if the price breaks through the pivot points at the bottom, then you should start selling the currency pair like it's Enron or Theranos stock. The price being below the pivot point would signal bearish sentiment, and that sellers could have the upper hand for the trading session. Let's take a look at the chart of GBP USD. So pivot points here. Price stayed below pivot point, indicating bearish sentiment. So overall it's going down. In the chart above, we see that the price tested the pivot points, so here, which held as a resistance level. Next thing you know, the pair keeps getting lower and lower. If you had taken the clue that the price remained below the pivot point and sold the pair, you would have made some nice moolah. GBP USD dropped almost 300 pips. Of course it doesn't always work out like this, of course it doesn't. There are times when you think that Forex traders are bearish on a pair, only to see that the pair reverses and breaks through to the top. So we got price breaks lower, bearish sentiment, S1 holds, price breaks through the pivot point, buyers are dominating and keeps going up. In this example, if you saw price breaking lower from the pivot point and sold, you would have had a sad day. Later on during the European session, EUR/USD popped higher, eventually breaking through the pivot point. What's more, the pair stayed above the pivot point, showing how buyers were rocking away. The lesson here, traders are fickle. How Forex traders feel about currency can shift dramatically day to day, even session to session. This is why you cannot simply buy when the price is above the pivot point or sell when it's below it. Wait, but then it just told us, like here, if the price breaks through the pivot, it's a sign that traders, and you should start buying the pair, like Krispy Kreme donuts. But then it also says you cannot simply buy when the price is above the pivot points. Instead, if you choose to use pivot point analysis in this way, you should combine it with other indicators to help you determine overall market sentiment. Right, okay, so all that just to say, don't just look at this on its own, use other indicators. Right, okay. If price goes above pivot point, it can be bullish. If price goes below pivot point, it can be bearish. However, maybe like that. Can be bearish. However, that's not always true, as price can reverse whilst on a bear run and also reverse on a bull run. Use other indicators alongside pivot points. Analysis. Right. Know the three other types of pivot points. The standard method of calculating pivot points is not the only way to calculate pivot points. Just like listening to BTS is not the only way to listen to K-pop. Blinks 안녕하세요. Okay, traders have worked on improving the original pivot points, and now there are other ways to calculate for pivot points. In this lesson, we'll talk about these other methods, as well as give you the formulas on how to calculate for these levels. The woodie pivot point. Okay, resistance 2 equals pivot point plus high minus low. Resistance 1 is 2 times pivot point minus low. Pivot point is high plus low plus 2 times C, which is the closing price, divided by 4. Support 1 is equal to 2 times pivot point minus high. Support 2 is pivot point minus high plus low. Yep. In the formulas above, you'll notice that the pivot point calculation is very different from the standard method. What was the standard method for pivot points? Pivot points, right, okay. High plus low plus close divided by 3. High plus low plus 2 times close divided by 4. In order to calculate the corresponding support and resistance levels, you would use the difference between the previous day's high and low, otherwise known as the range. Corresponding support and resistance levels. High minus low, high plus low. High minus low, pivot point minus high minus low, support 2, minus high plus low. Here's a chart example of the woodie pivot point calculation applied on Euro USD. The woodie pivot point support levels and resistance levels are the solid lines, whilst the dotted lines represent the levels calculated through the standard method. Wait, solid lines, dotted lines is the normal one. So woodie pivot points here. So it's just a bit below the normal pivot point. Resistance 1 is here, still below normal resistance 1. Resistance 2 is still lower than resistance 1. Support 1's lower than support 1. Woodie support 1 is lower than normal support 1. And woodie support 2 is, I want to say bang on, but the other one might be still lower than woodie support 2, so I don't really know. Because they have different formulas, levels obtained through the woodie calculations are very different from those gotten through the standard methods. Some traders prefer to use the woodie's formulas because they give more weight to the closing price of the previous periods. Right, okay, so woodie pivot points. So there's no resistance 3 or support 3 calculations. So R2 is equal to PP plus high minus low. R1 is equal to 2 times PP minus low. PP is equal to high plus low plus 2 times closing price. Is it time divided by 4? Support 1 is equal to 2 times PP minus high. Support 2 is equal to PP minus high plus low. Got this. So woodie pivot point is solid line, standard pivot point is dotted line. Some traders prefer to use woodie over standard, as they give more weight to the closing price of the previous period. Others prefer the standard formulas because many traders make use of those, which could make them self-fulfilling. Some traders prefer to use standard as it's common amongst many traders. Therefore, it could make them self-fulfilling. In any case, since resistance turns into support and vice versa, if you choose to use the woodie formulas, you should keep an eye on those levels, as they could become areas of interest, whatever floats your boat. Camarilla pivot point. Camarilla pivot point. Calculations. So it seems that there's four levels of support and resistance. So R4 is equal to C, or the closing price, plus high minus low times 1.5. R3 is equal to closing price plus high minus low times 1.25. R2 is equal to closing price plus high minus low times by, what's that, 1.136s, 1.1123 R1 is equal to closing, a lot of closing price has been used here, plus high minus low times 1.0833. 1.0833. PP, or pivot point, is equal to high plus low plus closing price over 3. That's the standard one, isn't it? The standard pivot point calculation. Support 1 is equal to closing price minus high minus low times 1.0833. 1.0833. So it's all the same across the board, right? Okay, so S2 is equal to closing price minus high minus low times by 1.11236. S3 is equal to closing price minus high minus low times by 1.25 S4 is equal to closing price minus high minus low times by 1.5. Right. Good. The camarilla formulas are similar to the woodie formula. They also use the previous day's close and range to calculate the support and resistance levels. The only difference is that you could calculate for 8 major levels, 4 resistance and support, and each of these levels should be multiplied by a multiplier. The main concept of camarilla's pivot points is that it is based on the idea that price has a natural tendency to revert back to the mean. Sound familiar? Or in this case, the previous day's close. So it's like an oscillator then, right? To revert back. The idea is that you should buy or sell when the price reaches either the third support or resistance level. So the main concept of camarilla pivot point is that it's based on the idea that price has a natural tendency to revert back to the mean, to the previous day's close. In this case, the previous day's close. The idea is that you should buy or sell when the price reaches either the third support or resistance. Use camarilla pivot point by buying or selling when the price reaches either the third support or resistance level. However, if the price were to burst through support 4 or resistance 4, it would mean that the intraday trending strong and it's about time you jump on that bandwagon. If price broke through S4 or R4, it would mean the intraday trend is strong. You should trade the trend. Check out how the camarilla calculation gives different level solid lines compared to the standard method level dotted lines. Where is the normal pivot point? Is that where the normal pivot point is? The black one there. But there's no black line here though. Camarilla, S1, S2, R1, R2. What? Why is the pivot point below the support and resistance levels? Shouldn't it be in the middle? What? Oh wait, never mind, it's meant to be like this. It says more about it later on, so as you can see from the chart above, more emphasis is given to the closing price as opposed to the pivot point. Right. So more emphasis is put on the closing price than the pivot point. Because of this, it is possible that resistance levels, so here, could be below the pivot points, or support levels could be above it. Right, so it could just switch other way around. See how all the support and resistance levels are above the camarilla pivot points. More emphasis is given to closing prices close to the pivot point. Yeah, but does it actually mean anything if the pivot point is below the resistance or the support levels? Because like when we're in the last lesson, it was like being able to tell market sentiment. So they mentioned that using the pivot point, so depending on which side the prices are, you can tell whether the buyers or sellers have the upper hand. But then that's only using the pivot point. So, say for this example right here, how would you know which, like whether the sellers or buyers, are there more sellers or buyers on here? Because both the support and resistance are above the pivot points. So supports resistance, because yeah, that's weird. Right. Don't really know how that works, to be honest. More emphasis. So it's possible that resistance levels could be below the pivot points and or support levels be above the pivot point. Right. Yeah, this is the weird one. Fibonacci pivot point. Pivot point. Calculations. R3 is equal to PP plus high H minus L times by 1. R2 is equal to PP plus H minus L times by 0.618, so the Fibonacci numbers. PP R1 is equal to PP plus high minus low times by 0.382. PP is equal to high plus low plus closing price divided by 3, so pretty normal. Support 1 is equal to PP minus high minus low times by 0.382. S2 is equal to PP minus high minus low times by 0.618. S3 is equal to PP minus high minus low times by 1. Yep, that looks right. High minus low, high minus low. Fibonacci pivot points levels are determined by first calculating the pivot point like you would the standard method. Next, multiply the previous day's range with the corresponding Fibonacci level. Most traders use 38.2%, 61.8%, 100% retracements in their calculations. Finally, add or subtract the figures you get to get the pivot point, and voila, you got your Fibonacci pivot point levels. Look at the chart below to see the levels calculated through the Fibonacci method, solid lines, differ from those calculated the standard method, dotted lines. Right, okay, so this is standard support 2, support 1. Was that black line meant to be normal pivot points? Pivot points here, Fibonacci pivot points here. Fibonacci resistance 1, Fibonacci resistance 2. This is standard resistance 1, standard resistance 2. The logic behind this is that many traders like using the Fibonacci ratios. People use it for retracement levels, moving averages, etc. Let me just get a photo of this. Why not use it for pivot points as well? Remember that both Fibonacci and pivot points levels are used to find support and resistance. With so many traders looking at these levels, they can actually become self-fulfilling. Right. Which pivot point method is best? The truth is, just like all the variations of all the other indicators that you've learnt so far, there is no single best method, of course. It really all depends on how you combine your knowledge of pivot points with all the other tools in your trading toolbox. Just know that the most charting software that do automatic calculations normally use a standard method in calculating the pivot point levels. But now that you know how to calculate these levels on your own, you can give them all a swing and see which one works best for you. Pivot away. But remember always to use the pivot points with other market indicators. Okay, summary. Summary pivot points. Oops. Pivot points are a popular technical analysis tool used by traders to identify potential support and resistance levels in the market. So, technical analysis tool. Technical analysis tool used to identify potential support and resistance, supports and resistance levels in the market. They also help traders make informed decisions about entering and exiting trades. Setting stop loss orders and establishing profit targets. Help traders make informed decision about entering and exiting trades, setting stop loss orders, establishing profit targets. Pivot points are usually calculated based on the high, low and closing prices of a currency pair in the previous trading periods. Based on the high, low and closing prices of a currency in the pivot points are usually calculated based on the high, low and closing price of a currency pair in the previous trading periods. There are four main ways to calculate pivot points. Four main ways to calculate pivot points. Standard, woodie, camarilla and fibonacci. Pivot point trading tips. Here are some easy to memorize tips that will help you make smart pivot point trading decisions. Pivots can be extremely useful in Forex since many currency pairs usually fluctuate between these levels. Most of the time the price ranges between R1 and S1. You can use these pivot points as potential areas where price reversals or continuations may occur. This means that pivot points can be used by range, breakout and trend traders. Pivot points can be used as potential areas where price reversals or continuations may occur. Range bound traders will enter a buy order near identified levels of support and a sell order when the pair nears resistance. Breakout traders use pivot points to identify key levels that need to be broken for a move to qualify as a strong momentum move, to qualify as a strong momentum move. Sentiment or trend traders use pivot points to help determine the bullishness or bearishness of a currency pair. The bullishness or bearishness of a currency pair. The simplicity of pivot points definitely makes them a useful tool to add to your trading toolbox. It allows you to see possible areas that are likely to cause price movement. Pivot points allow you to see areas that are likely to cause price movement. You'll become more in sync with market movements and make better trading decisions. It's important to note that pivot points are just one of the many technical analysis tools available. Using pivot points analysis alone is not always enough. Use pivot points alongside other indicators. Learn to use pivot points along with other technical analysis tools such as candlestick patterns, MACD, or moving average convergence, divergence, crossover, moving averages, crossover, the stochastic, relative strength index, etc. The greater the confirmation, the greater the probability of a successful trade. Pivot points. Browse all quiz. Pivot points can be a great help for potential levels of interest or adjustments. Make sure you've covered all the bases by taking this quiz. Right. What is a pivot point in Forex? A point to turn back and regret your life decisions. Jesus. A tool are formed using the open, high, low and close, not this one. An area. Simply put, a pivot point and its support and resistance levels are areas at which the direction of price movement can possibly change. In pivot point analysis, what does the R stand for? Resistance. In pivot point lingo, R stands for resistance. What type of trader is pivot point analysis best suited for? Day trader, isn't it? Pivot points are especially useful for short-term traders, like day traders who are looking to take advantage of small price movements. Pivot points are very similar to Fibonacci retracement levels as they pinpoint potential support and resistance levels. Pivot points have one perceived advantage. What is this advantage? It's objective, isn't it? Fibonacci levels are for nerds, while pivot points are for the cool crowd. Very nice. Fibonacci levels still have some subjectivity involved, whereas pivot points are purely objective. Yep. Fibonacci levels are manually drawn, therefore subjective, while pivot points are calculated, therefore objective. How do range-bound traders typically use pivot points? Range-bound to identify potential reversal points where they can buy and sell orders. Range-bound traders use pivot points to identify reversal points. They see pivot points as areas where they can place their buy or sell orders. How do you use pivot points to gauge market sentiment? If the price breaks through the pivot point to the top, it's a sign that traders are bearish and you should sell. If the price breaks through the pivot point to the top, it's a sign that traders are bullish and you should buy. If the price is ranging between two pivot points, it's signs that traders are bearish and you should sell. Middle one. All you need to do is keep an eye on the pivot point. If the price breaks through the pivot point to the top, it's a sign that traders are bullish and on the pair and you should start buying the pair like his Krispy Kreme donut. Now if the price breaks through the pivot point to the bottom, then you should start selling the currency pair like it's Enron or Theranos stock. Don't, because remember that lesson, it said don't always just look at the one indicator, make sure you confirm it with other indicators as well, so don't. Which market close do traders usually use to determine the high, low, open and close values of their pivot points? It's New York, isn't it? Since Forex is a 24-hour market, most Forex traders use the New York closing time of 5 PM EST as the previous day's close. If support 1 is holding and you decide to buy, which pivot point level should you look to take profits? Support 1 is holding, it's a pivot point. If support 1 is holding and you decide to buy, for your take profit level you should target pivot point because it's above support 1. Which of the following is another type of pivot point? Woodie. The other types of pivot points are woodie pivot points, camarilla pivot points and Fibonacci pivot points. True or false? Pivot point analysis by itself is enough to trade Forex. False. Although pivot points are objective and calculated, you shouldn't rely only on pivot point levels. How do breakout traders typically use pivot points? To recognize key levels that need to be broken to be classified as a real breakout. Yep. Breakout Forex traders use pivot points to recognize key levels that need to be broken for a move to be classified as a real deal breakout. In pivot point analysis, what does the S stand for? Support. In pivot point lingo, the S stands for support. One of the difficult things about taking breakout trades is picking a spot to place your stop. If you are going long and price broke resistance 1, where would you need to place your stop? Your stop. Resistance 1. So below pivot point, isn't it? Oh no, unlike range trading where you're looking for breaks of pivot points, support and resistance levels, You're looking for strong, fast moves. If you are going long and price broke resistance 1, you should place your stop just below resistance 1. Oh, right, okay. As for setting targets, you would typically aim for the next pivot point support or resistance level as your take profit points. True or false? The more times the currency pair touches a pivot point, then reverses, the stronger that level is. True. The more times the currency pair touches a pivot point, then reverses, the stronger the level is. What do you call this concept that occurs when support levels break? They usually turn into resistance levels. Role reversal. This concept of role reversal also applies to broken resistance levels, which become support levels. These would have been good opportunities to take the I think I'll play it safe method, aka don't trade. Cool. Yep. Okay. I'm going to leave this episode here. Thank you guys for watching. In the next video, I think we covered the pivot point stuff. We're going to be starting what is Heikin Ashi. So yeah, I don't really know what it is, but I'm sure we'll learn more about it later on. Oh, looks like it's some candlestick stuff. So yeah, very good. Thank you guys for watching, and I'll see you guys in the next video. Bye.